Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, August the 27th. Yesterday, I said it was Sunday, August the 27th. This calendar I have, for some reason, the Sunday dates are in yellow, and it was night when I did it. So when I looked over, I didn't see the yellow column. I only saw which was the Sunday column. I only saw the Monday column because all the other ones are black. And so I'm thinking, okay, beginning of the week's the 27th. So it really is August the 27th, the year 2018. So let's talk trading. Expectations. I think I was reading an email, and they were talking about various things, and actually they were using an example about eating fruit that if you are used to eating, say, a certain apple or banana, a certain type, you know what to expect. And so what happens is that in a way, after a while, you kind of get desensitized. This is what you expect, and you don't really taste it anymore. But then let's say you get an apple that's just a little tartar than normal, and then it's just like, uh-oh, ew. This is tart, and so because it didn't meet your expectations, and maybe you don't enjoy it, maybe you quit eating it, you throw it away, turn it into compost. Now, what's all this got to do with trading? Every time you enter a trade, if you really think about it and you're really honest, you expect it to be a winner. I mean, come on, you do. You have that expectation. And you see that having that expectation that every time you enter a trade, you expect it to be a winner is going to set you up for some pain. You might be angry when you lose some money if your stop is hit. And we all know that you're going to use money in risk management. So you're going to get stopped out some of the time. But because you expect every trade to be a winner, you're just setting yourself up for pain. So maybe if you change your expectation, you say, okay, I'm starting a week out, and by the end of the week, I expect to have more money than when I started. See, right now, you're delaying your response or your reaction because you're not even you know if you win or lose each trade, but that's not what you're focused on. You're focused on how am I doing for the week, or maybe how am I doing for the month. So by changing that expectation, changing when you actually measure it, it might help you in your trading. So when you enter a trade, you're not setting yourself up for all this pain along the way. Now, somebody could counter and say, well, I mean, come on, let's be real here. Why would you enter a trade if you expect to lose? Well, the thing is, why not expect to lose? Well, then that doesn't seem to make sense. But I mean, you are entering something, you enter a trade, you've got no control over the outcome with the exception of how much you lose. So maybe if you think, you know what, I'm going to enter this trade, and the worst thing that's going to happen is I'm going to lose this amount or less, because maybe you just scratch the trade because you see it's just not working in the moment. You decide, you know what, I'm just going to scratch it. It went up a little bit. It came right back down to where I started. The way price action is, or the way the indicators are reading, or the candles, or whatever, you decide to just scratch it. So that's what you can control, is the losing side. Winning side, once you get up there, then you could say, okay, well, I'm willing to give back this much, or I'll take some of the profit and let the rest ride. I mean, that's one of the methods I learned from a good buddy, trading buddy, Wild Super, way back trading stock. You make you're in the profit, you take half off, you move your stop loss up to break even plus one or whatever, plus a dime, plus a nickel. And then you just let that trade ride and see how much you can make. So that's an alternative. But the point being is that these expectations that we have can really kill us as traders because it takes us out of having the right mindset, the right. And like I talked about in yesterday's video, it could cause us to go on tilt, that kryptonite. And so you want to avoid kryptonite, meaning kryptonite is that which causes you to go on the tilt and just blow up, part of your account or the whole account. Just causes you to abandon your plan, your trading plan, all your common sense. Everything you know goes out the window because you're on tilt and you're just trying to get that money back, get your chips back. So let's take a look at the charts. Okay, here we go. Monthly. Once again, we're right here in the candle body the previous month. I don't remember. Weren't we around this level when I made yesterday's video? Not much movement. And look at this. All the gaps is filled. Even I showed you last night, we had about, 4 or 5? But so we've got the week. We've already filled the gap. And the first day isn't even over. So those of you who take advantage of these that Sunday/Monday gap, the gap between the Friday close and the Sunday/Monday open, you are in the money. And the daily, once again, we popped out of that lower wick zone right here. And there was about a 17 pip opportunity there. You see we're 13 pips off the bottom, and now we're 4 pips below the previous day's low. And we've got 1, 2, 3 pairs over 100, and that euro yen sitting right there at 96 on the range. So I really think next month, starting September, I should move over to the euro yen, because the dollar yen's only at 41. And we look at the chart yesterday. I believe we were I think I made the video somewhere around here. I think it was somewhere here, because I know we took out that previous pivot point that was missed right there. And the rat zone, I mean, we got a 41 pip range. No, because there's really no rat zone trades here. We need more range. So you can see here, if we were on the euro yen, you see right there, we'd have a much more. And look at this. You see there was the red rat and there's a green rat here. And then we had it dipped right back in the green rat zone. If you were lucky enough to jump in right around that 129 even number there, you'd be up about 77 pips right now. But that's hairy hindsight. We weren't looking at the euro yen. We've been looking at the dollar yen. And once again, we took out the pivot right there, the first 4-hour candle. And I'm looking to go long somewhere around that weekly pivot here. And once again, miss pivot. There's there's a target. If you're short, there's a target you want to look for right there. And price action, we saw the 3 ball, we saw that 1 ball, and you can see here last night. So right there, candle 1 ball at the top, red at the line, profit to be made. Okay, now we got a 1 ball at the bottom, looking for green at the line. We haven't quite hit that 111.10. You can see we had a 111.098, but that's hand grenade close, so you shouldn't have entered. You shouldn't have rushed that trade. And you can see here we're now coming back the other way. Plus, there was a 1 ball on this candle, most likely when it was pushing up. So chances are taking a green, if it didn't even hit the line, but had it hit the line, that 1 ball might tell you, yes, it's breaking out, but you might want to be on guard for a reversal. And you can see here we've got lots of selling going on. Oh, and just for those tuning in, what is this selling, waiting, buying indicator? I call it my spread dots. And what I do is, you see the red dot, that's the peak of, or the red star, that is the peak of the bid. And this green star, that is the valley of the ask. So as the ask, which is pink, comes down, if it hits this, it'll make it go lower. And the blue, if it gets higher, it'll push the red up. And so what happens is, for selling to happen, oh, see, we just now got buying. So for buying to happen, the bid has to get above the lowest ask. So in other words, if you hit F9 on your screen, you see right here, this was the lowest ask, and then the bid right here got above it, so now buying can commence. Okay? And then just the opposite. If the ask comes below the peak of the bid, then selling starts. That's just an observation I had. It's nothing, I don't know. You can't look that up in a book because I haven't even written a book about it. But that's just an observation I had. I just hit Alt T to get rid of the that little bar there, the bid ask box. But actually, I put it up there so you can see these numbers match here. So that's, what I use to consider buying and selling, and it's timing. You don't want to be buying when it's selling. You want to be buying when that bid gets above the peak of the valley of the ask. You can see right now it just changed. We're outside, and so we've got the ask above and the bid below. So we're waiting to see which way price gets pushed. And we had this chart up again as usual, the 5 lines from the previous daily session. And once again, candle color at the line usually will result in some pips in your pocket, sometimes a little, sometimes a lot, right? And here we go, wick zone. Price doesn't like staying in the wick zone. Holo zone, here's opportunities. Once again, at the 111.01, you can see you could have picked up a handful of pips. Hey, I had to pause, had a delivery there. Anyway, we're looking at the inventory reduction bars, and you can see right here, Randy real time. We've got a short situation here. So anybody wanting to go short, there was your trigger here. And looking at the daily, weekly, monthly, open, high, low for the previous day, week, and month. Maybe I should say the previous day, week, month, open, high, low. Once again, just horizontal lines, and we just trade with the candle color at the line. Nothing difficult. And you can see here, looking at the bid ask, what we have is pretty much sideways motion, maybe about a 6 pip difference here. Once again, a pocket full of pips. And I went the wrong way. And you can see the Einstein line. There was a long trigger, some shorts. And so, once again, pocket full of pips. So remember, let's keep our expectations real, keep them in check, because it's not what you trade, it's how you trade it. Let's go drain the banks this week.